Hello, this is Scott Hamilton from InKnowVision. Thanks for watching this webcast. This is one of a series of short videos on captive insurance companies. You can view more of these videos by going to YouTube and searching for InKnowVision Captives. You could also find more information on our website, which is InKnowVision.com. These videos are educational and are not designed to be tax advice. Please be sure to read the disclaimer that is on the last slide of this presentation for more information. If you have any questions or would like to explore next steps to see whether or not a captive insurance company could be right for your company, feel free to contact us. The phone number where you can reach us or the email address where you can reach us is located on this slide. It's also on the last slide. So again, feel free to reach out with questions or thoughts about how this might be applicable for you. In this particular webcast video, we're going to be looking at a case study. This is a manufacturing company located in the Midwest. They have 300 plus employees. They have 35 million, probably more like 40 million this year in sales. They have plants primarily in the Midwest, but they also have a plant outside of the country. Net profit in the past has been about 4.5 to 5 million. This year the projection is closer to 8 million. They have lots and lots of insurable risks, risks both that they cover through a third-party carrier and risks that they are not currently insuring. When we brought the actuary and the underwriter in to take a look, the determination was that this company probably had risks that would generate a premium of about $2 million if they were to insure all of their risks. This was not really something the business owner wanted to do, but you can see how we ended up reducing that premium by selecting the risks that were insured through the captive. What we're going to be looking at is two aspects. We're going to quickly look at premiums saved as a result of using the captive, and then we're going to spend a few minutes more talking about taxation, both in terms of the benefit to the company and taxation of premium income to the captive insurance company. Let's take a look at the high-level steps that were taken here. First of all, the captive was formed. There's a lot of detail there, but you can find more in another video about that. Insurance coverages were selected and then purchased, and then the captive made two elections. The important one for this video is the 831B election, where the captive is electing to be treated as a small insurance company. The ultimate premium paid to the captive for coverages was $1 million per year. Now, of course, that was in year one. Year two could be a little bit different. Year three could be different depending on coverages selected, and also claims experience. In other words, how well did the captive insurance company do in its underwriting. The premium savings we don't have a slide on, but the premium savings in this particular case was about $25,000 a year. In other words, the company was able to reduce the amount of premium it paid to a third-party insurer by about $25,000 by taking some of the risk that was previously insured with a third-party insurer and insuring it with the captive. The second area economic benefit here is that the operating company, the manufacturing company, when it pays a premium, is deducting $1 million for insurance coverage, which is saving the operating company about $400,000 in income tax per year. Now, ultimately, some of that tax is going to get paid back in the future from captive distributions, but we have sort of an immediate tax savings to the operating company under this example of about $400,000 per year. Now, the captive has no taxable income, so we're now to remember there's two companies involved here, the manufacturing company and the captive. The captive has no taxable income because it's qualifying as a small insurance company and because its insurance premium in the year is less than $1.2 million. We have another video that talks in greater detail about how that election works, but for the purposes of this video, in year one, the captive has no taxable income. In year two, let's take a look back at the manufacturing company. If they continue on with the program, they'll have another deduction. Let's assume it's $1 million. That would save the manufacturing company another $400,000 in income tax. And a slight difference here now on the part of the captive. The captive is probably going to have some income, and that's because it had investments and it probably earned some interest or dividends or short or long-term capital gains. And so that captive insurance company now is going to have to pay income tax on that income. Keep in mind that all captives are C corporations, and so like all C corporations, they're going to have income tax, which is a flat rate, which is at about 35%. Now, keep in mind that's going to be in some ways a detriment, because if we had a company that was making these investments that was a pass-through, or if you were making them as an individual, you would have a much more favorable tax rate because you'd be getting qualified dividends or capital gains tax rates. So in any analysis that we do here, we want to make sure we understand what the investments are going to be, and we want to understand what the taxation is going to be, and we're going to want to balance the potential savings from a tax point of view to the operating company with the higher tax rates of the captive insurance company. Generally speaking, there is a good advantage to using a captive insurance company from a tax point of view. There's usually an advantage from a premium savings point of view, and of course there are other advantages to being able to insure some of your company's risk with a captive insurance company. Today what we want to do is to sort of focus in on the tax analysis, but we have other videos which will talk about some of the other advantages. If this is the sort of thing that makes sense for you or your company to be looking at, again, feel free to give us a call at the phone number listed, or email us at the email address listed, or if you just want to try and get some more information, check out some more videos at YouTube. Don't forget to read the disclaimer here. That's important. We're not trying to give tax advice. We're just trying to help people understand what some of the advantages could be to using captive insurance along with your own operating business. Look forward to the chance to speak with you if that's appropriate, and thanks again very much for attending.